The shilling appears to be weakening as we're approaching the middle of the month, Ken. Why is that?
Basically, it will be based on end-month expectation of corporate demand coming in, mostly from oil companies. But we've seen, okay, it has been weakening since actually towards the end of last week. But what we've seen is it began to gain some ground today, which was a good move, but mostly supported by CBK open market operations, that is repos. But basically, the bias on the shilling still remains upside.
The repos are somewhere around 18% right now, and this you're saying has supported the shilling. Is this all the support it needs?
Basically, of course, there is the fundamental weaknesses in the shilling still remain. But tomorrow being budget reading, of course, we expect Treasury to implement some measures that will actually put in some long-term factors to support the shilling. Of course, CBK cannot keep up these short-term movements, open market operations, at 18%, as you mentioned, which is where the CBR is. We've seen interest on T-bills wane. We've seen in the subscriptions for the last 2 weeks, and the rate has actually begun to move upwards, which is not what CBK would like to happen. So I think basically they will hold this this policy until probably they can implement some longer-term measures as we enter into the financial year 2012-2013.
The expectation is that the budget reading tomorrow will be aligned to the current monetary policy. But what if Njero Githai, the finance minister, decides to be a bit more imaginative and shocks the market?
I don't think so. It would be a bad year to be imaginative and trying new things, especially with the new government structure we're implementing, which is expected to be quite expensive and may put a strain on expenditure. So basically what we'll be expecting is measures that will actually try support the economic growth. Probably for this year, it's estimated about 5.3%. They're estimating for the financial year 2012-2013 at 5.5. So they'll want to nurse this and until it meets levels of probably Vision 2030, because we are way below that where we're supposed to be in this financial year.
Ken,
so I don't think he'll go the imaginative way.
Right, Ken, why are you against imagination? I thought imagination is always a good thing.
No, not really. Not when there's so many factors on the line. Not when we've seen all the volatility in the shilling and interest rates. I think they would what they would do is go in and put in fundamental measures that will support the shilling and at the same time support economic growth and keep interest rates at reasonable levels.
We're also expecting the second part of the syndicated loan to be disbursed tomorrow. Why is this significant?
It's quite significant. Of course, we expect this, of course, will affect the money markets. We might also see more support for the shilling. And also, we've been seeing CBK have been quite active selling off dollars in the market to support the Kenya shilling. And what we've seen is the forex cover has actually fallen to way below levels that we were at the beginning of this quarter. So this will also help in upping these levels.
A quick direction on the short-term interest rate would be the 10-year bond issue that is slated for this month. What are analysts looking at this and thinking about?
Of course, we expect CBK this time around may actually try to enforce auction discipline. We might not see rates as high as we saw in the last 5-year auction accepted, because as we go into the new financial year, they'll be looking to set a trend, to set a long-term trend, and they would not want the rates to move above where they currently are. Currently, the secondary market, the bond is trading at about 13%. So we should expect it to come at anywhere around these levels.
The interesting thing is the CBK is also trying to enforce auction discipline by kicking out aggressive bidders. Give us a background on why this is coming up.
Basically, because of course we know that they are trying the cost of borrowing. They've been trying to push this down since the beginning of the year. So what we've actually been seeing, that's why we've actually been seeing the T-bill rates coming off, and also with consequent 1-year papers. Because if you compare the first 1-year paper, which is at about levels of 20%, to the last 1-year paper that was issued at about 12%, they've actually been trying to bring down the cost of borrowing. And as we go into the new financial year, we don't expect them to want to borrow at the levels we saw in this financial year of as high as 22%. So they will be trying to instill some discipline.
Let's finish off with the Nairobi Securities Exchange. There's been a lot of activity, especially around counters like Equity, KCB, and Safaricom. Heavy foreign presence as well.
Yes, there's been quite a bit of foreign presence. I think what we saw last week as the market began to come off, especially probably on counters like Equity, which usually has a lot of foreign presence, basically because of its liquidity and its speculative nature. As it went to levels of about 20 shillings, we saw them come in and support it. Also, KCB is always a very popular stock with foreign investors. And also Safaricom at 3 shillings and 30 cents, we've seen a lot of support come in, and we've seen it begin to gain probably now above levels of 3 shillings and 40 cents. This activity has also supported the index, and we've seen it climbing for the past 2 days, which is actually pretty good. There's also a lot of local investors. So I think, yes, it is, as you mentioned earlier, a buyer's market, and we expect this activity to hold until probably when we reach some resistance levels for some counters.
Asante sana. We'll leave it there. Ken Minjire, fixed income and money markets analyst at Stanbic Investments in Nairobi.